Hi, I'm Bette Hochberger, CPA, CGMA. This channel covers tax strategies and preparation, real estate finance, and more. Come learn how to grow your business and keep your wealth. Top tax deductions, credits, etc. for homeowners. Now, a lot of these are going to have caveats, but let's blow through it anyway. So number one, the top of mind thing that comes to me for homeowners is you have certain itemized deductions you're allowed to take. The two are mortgage interest deduction and property taxes. Now, I'm going to say all of these things are caveated because there are limitations, there are stipulations, there are conditions, and you really have to see what is right for your personal scenario, right? It's personal finance because it's personal. So, yes, you can take your real estate taxes as a deduction if you're itemizing, but there's a $10,000 SALT, right? SALT is state and local tax. There's a $10,000 limit. So if you live somewhere where the property taxes are really high, you're only going to get to deduct $10,000 of it. Mortgage interest. Again, there's some limits on this, right? It depends on the, well, first off, what are you using those dollars for? Was it to purchase a home or renovate a home, right? If you're like, well, I took out money to send my kids to college, you can turn some of your deductions non-deductible when they are for things that are not buying and financing personal residences. There's also some limitations on how much you can deduct for mortgage interest, depending on how big your loan is. If you've got a multi-million-dollar loan, most likely you're not going to be able to deduct the full amount of the mortgage interest that shows up on your 1098 form. So these are things to just be aware of. And then there's the overall issue that at this point, the standard deduction is so high. I think most of my clients at this point are not itemizing any longer. I think most people are taking the standard deduction. It's like $30,000 for a married couple. So what that means is you need all of your standard deductions to total more than $30,000 in order to see any tax benefit from those real estate taxes, that mortgage interest. Work with a professional who can walk you through all of this and see, does it make sense? Because why would you itemize if the standard deduction's higher? Energy efficient home improvements. We're trying to keep the heat out, keep the AC in, get better results for our homeowners insurance as far as having impact resistant windows, things like that. There are other items that you can actually get credits. We like credits better than deductions on your home, and it has to be your primary residence, right? That's what we're talking about for these credits. Energy efficient, like air conditioning, water heating, furnaces, all kinds of stuff. There is a limit on these things. So some items have a per item limit, some have an annual limit. Again, you're going to want to talk to a tax professional who can help you navigate this because it's not always the easiest thing to figure out. You can also, it's become more popular, solar panels on your roof, solar water heaters, wind turbines. I don't know, maybe you're putting wind turbines somewhere on your property. Battery storage, right? I know there's Tesla batteries out there. There's all kinds of things that if you're making your home more energy efficient, you could potentially be claiming valuable tax credit. So if you're doing the work anyway, you might as well get the tax credit for it. Okay, home office deduction. Let me caveat this one also with you need to be self-employed, right? If you own an LLC or you file as a sole proprietor, you are able to take a home office deduction. Does not apply if you just happen to work from home because it's convenient for your employer or yourself or whatever. This is not a W-2 deduction. This is strictly you're filing a Schedule C on your 1040, right? Even my S corporation filers, this really doesn't apply to you in this manner. But if you're self-employed, you're a 1099 worker, you have a single member LLC, you're a sole proprietor, you can take a home office deduction. Now, it does need to be exclusive use. So please don't come and tell me, Bet, I work at my kitchen table and, while I'm not cooking, I'm working on my business. It's not going to fly with the IRS. It has to be exclusive use. So if you've got a spare bedroom, or if you have like a secondary property, like you built a little shed or something, or you converted your garage, or you're even working in a closet, I have seen it happen, right? It has to be an exclusively used area. You can take home office deductions. There's a simplified method and there's a way more complicated method. The simplified method, all you really need to know is the square footage of the office versus the entire property. There is an alternative calculation to that, which is you can count rooms. So you could say I have one room for my office out of my house of 8 rooms, or whatever the case may be. And you're allowed to use whichever is more beneficial to you. So that is something, again, please talk to a professional. Don't try to claim your dining room or your living room. Like, I watch TV and I do work. Doesn't make it a home office. It is complicated and you can get audited for screwing this one up. So go find a tax professional. Now, biggest one, home sale exclusion of your primary residence. It is a big number. We are talking about, for a married couple, excluding $500,000 of capital gain when you sell your primary residence. But again, you have to qualify, right? There are some caveats to this. So you have to have owned the home for at least 2 years out of the previous 5. There's a look back requirement. I sold a property that was my primary and now here I am doing it again, right? You have to have, it's a 2-year. You can't say I did it 2 years ago and now I'm here doing it again. The IRS will do a look back. There's more caveats beyond that. For example, if you have to move because of a specific reason. So if you're not like a straightforward, I owned my home for 10 years, I lived in it the whole time, yes, give me that exclusion, you're going to want to go ahead and talk to a tax professional because there's a lot of ins and outs for this. But overall, just keep in mind, if I'm selling my primary residence, I most likely am going to qualify for a huge amount of an exclusion, and it should mean that I'm probably not paying taxes on selling that home. So I know I threw a lot out of you, and I know there's a lot of ins and outs and stipulations and buts with this. That's why it's so important to work with a CPA who knows all the rules, right? So that's what we're here for. If you're trying to figure out how to maximize these tax benefits on your house, how to get some of these credits, how to best utilize the space you have to take advantage for your taxes, you know where to find us, right? Schedule an appointment, shoot us a message, an email, give us a call. We're happy to work with you, and we will see you next time. Thank you for watching. If you found this helpful, please leave a comment, like, and subscribe. Stay tuned for more tips on growing your business and your wealth. Bye.